Coca-Cola, 3M, both reported this morning. Both beat on earnings and revenue. Coke is up 2.9% as of this very second, and 3M is up 4.5%. In full disclosure, I own 3M. I've been buying 3M for a while. Don't buy it just because I do. We're here to teach a process, and that process is long-term oriented, and you need to find the process that works for you. However, we love our process. It can help you determine what your process will be. Let's go look at these two companies. Coca-Cola Classic, KO, 2.9%. All right, guys. Coke is a big favorite of Warren Buffett. He bought it back in 1987. He started by buying it at 30 times earnings, a 30 PE. And he's made about 11.5%, including dividends since then. So first off, before we get to Mo and the earnings release, Coke reported 74 cents in profit per share versus an estimate of 69 cents and 11.95 billion in revenue versus 11.44, which to me, Mo, is a huge beat for a company that large.
Yeah, I mean, look at some of these highlights from their press release. Global unit case volume grew 2%. Net revenues grew 8%.
That's crazy.
That's insane for a company that is almost... You would think of Coke as a dinosaur.
Yeah.
It shouldn't move very much.
8% revenue growth.
8% revenue growth. Operating income grew 6%. Operating margin was 27.4% versus 27.9%
so small
the year
drop.
prior. Yeah. Let's see. Earnings per share grew 9%. Man. Okay, let me go through a little bit more here.
While you look at that, guys, the reason we bring this up, remember, overall, we don't really look at quarter-to-quarter results. We do it because we want to sit there and show you guys how we look at the long term of a company. If Coca-Cola had missed on earnings, we'd have been like, okay, whatever. We want to sit there and hear what Coca-Cola is saying. Are they reporting things that are going to affect the long term of the business? Are there fundamentals in the business that are changing based on what we're reading? So Coca-Cola is a $240 billion business. Now, the thing that's going to be attractive to a lot of people is this dividend yield of 2.4%. Remember, they eat up. The reason we put dividends paid here on our software is we want you to see how much are they spending to give you that dividend, $6 billion. We put it right underneath their free cash flow. $9.5 billion over the last 5 years on average. Sorry, $9.2 billion over the last 5 years on average, 9.5 in the last year. So it is 2/3 of their free cash flow. That's a big chunk. But Coke's a very mature company.
Yeah.
My guess is they don't have a lot of reinvestment opportunity.
No.
So what else do you have to report here, Mo?
So we can break down their kind of where they're driving their revenue from. So sparkling soft drinks grew 2%, primarily driven by Latin America and Asian Pacific. So of course they're all over the world. Trademark Coca-Cola grew 2% itself, which is just mind-blowing to me. Here you go. Coke Zero grew 3%.
How did Coke Zero only grow 3%?
Latin America and North America.
You know what it was? What? I think I've decreased how much Coke Zero I'm drinking, so it probably really affected their results. I went from 6 to 8 cans a day down to 4 to 6 cans a day.
Wow, that's a big drop.
Big drop.
That's a big drop. And that lines up right with their growth. So, yeah. Juice, value-added dairy, and plant-based beverages actually grew 2%.
Plant-based beverages?
Water, sports, coffee, and tea grew 1%. Okay, so the interesting thing is there was no shrinkage anywhere. Everything is growth.
Well, and then you look at, one of the ideas that Warren Buffett used to have was the average American drinks 1 Coca-Cola a day. The average Chinese person, this was 20 years ago, drinks 1 a year. So there's still so much growth potential overseas for Coca-Cola and all these other soft drinks. And, it's something to consider about total potential revenue growth. Do I think Coca-Cola is going anywhere?
No.
No, I don't think so either.
Like the brand of all brands.
Yeah. So let's do a little more diving here. Very consistent profit margin. In the last year, they've done 23.8%. In the last 5 years, 23.2%. This gross margin's awesome, 59%. It's great. Now, the question is this PE of 23 too high? Is this price to free cash flow of 25 too high? Well, it depends.
I don't know. Looking at a company that's this mature and still going through this much growth, it really doesn't seem that way.
Yeah, plus the whole moat idea, the whole idea of like, how do you take, look at the second largest soft drink company in the world, Pepsi probably.
Yeah.
You literally would cause a riot sometimes in restaurants when they say, is Pepsi okay?
Yeah.
People are like, are you kidding? Pepsi is not okay. What was the company recently that just switched from Pepsi to Coke? Somebody just recently did that and it said, And the joke is we no longer ask people, is Pepsi okay? A really big restaurant company. Just switch from Pepsi to Coke. No, some Arby's is weird. Some have Pepsi. I've seen, okay, is it Coke now?
Culver's?
No, not Culver's. I said a big, oh, maybe it is Culver's. Oh, maybe that's what it was. Yes, it was. Well, no, not January. It was very recent. Maybe it was that one. No, Burger chain. Culver's.
Culver's.
Okay, it seems like it was Culver's. I thought it was somebody even more recent, and they were very happy to say, oh, thankfully we don't have to ask people anymore, is Pepsi okay? And by the way, I used to be a Pepsi guy. And by the way, Pepsi Max, the Coke Zero competitor, I love it. I think it tastes better than Diet Pepsi.
I've never had. I don't like Pepsi, but I've never had Pepsi Max.
I've never seen you drink a pop in your life since I've known you.
Yeah, I'm not really a pop drinker.
I literally can't remember a time you drank pop. But you're also a sociopath. You go to restaurants and drink water, but you don't drink the water until after you're done with the meal.
Correct. No
I
such
can't
thing
even
as
eat.
washing it down.
I can't even eat unless I have a drink ready to eat.
Yeah.
Okay, so let's look at the 8 pillars real quick
We
on
know,
Coke.
and every waitress knows.
4 X's, 4 check marks. The valuation's the question. 5-year PE of 27, 5-year price of free cash flow of 26. Slight increase in shares. That is a little bizarre. I don't know why that's the case. Debt, not worried about debt. One thing I don't like, Mo,
Yes.
is this net income is up $3.5 billion,
Ooh,
and the free cash flow is up 1.7. With that said, though, it could have been catching up because look, if the PE is higher than the free cash flow over the last 5 years, it shows that there was some catching up to do for the earnings versus the cash flow. So, guys, overall, even though it's only 4 checks, remember, it's about telling a story. And I look at Coke, and if this is a company that was $1 billion company, I would look at this a lot different. With the exact same check marks, I'd be like, wait a second, let's check this out a little bit. But Coke is this giant, sorry. I said Gina.
Yes, you did.
Coke is this giant company that has a huge moat. I'm going to give them a lot more leeway in terms of this sort of thing. So, guys, let's go to our stock analyzer. Oh, let's go to analyst estimates first.
Okay.
They're estimating 272 in profit this year, going to 370 in the next 4 years. Not a lot of growth. Mid single digits until the last year. And revenue, Mo, what are you looking at for revenue?
Pretty big jump, 46.25 billion to 56.5 billion.
Yeah, but the biggest part of that jump is the last year. So it just seems like the last year these analysts are a little biased there. All right, stock analyzer tool. Let's check it out. Let's go look at our history. When was the last time we did Coke? Very recent, October 9th. Let's pull it up. All right. Mo, what'd you put in for your assumptions for revenue growth?
So I did 2, 3.5, and 5.
Okay, I did 3, 5, and 7.
I like yours more.
Do you?
Yeah.
Okay, what about profit margin?
I did 18, 21, and 24.
So I did 20, 22, and 24, and the reason being is the last 5 years have been very consistently high.
Right.
But I still wanted to hedge on, okay, what happens if they go back to here?
Number.
I still think this is a little light. But anyway, I did the same thing for free cash flow. What about
Same
you?
here.
Okay. Now, what'd you do for PE?
I did 17, 20, and 23.
So this is the one that has 20 all across the board. I'm actually going to do 20, 23, and 26. This is probably the highest I've done for a company. But it is Coca-Cola.
Yeah.
And this thing's going to be around for a long time. You know what? I'm going to do 20, 22, and 24.
Okay.
What was yours again?
17, 20, and 23.
Okay. Now, for desired annual return, guys, now if you're new to our channel, this is basically our margin of safety. What return would you want to own this company? We have 3 assumption levels here, low, middle, and high. The lower your assumptions, the lower your return should be because it's more likely to happen. The higher your assumptions, the higher your return needs to be because it's less likely to happen. You need more safety. So Mo, I did 9, 11, never forget, and 13.
I did 10, 11 and a half, and 13.
11 and a half, huh?
Yeah.
That get you off guard there with
Yeah, you did.
Really? I do it every time, I think.
I know, but I wasn't expecting it there.
Okay. So I'm going to hit the analyze button. Now, guys, we're going to do 3M next. So stick with us here. I have prices of 37, 44, and 51. Mo, what'd you get?
I have 26 on the low, 42 on the high, and 33, 34 in the middle.
Okay, I have it on my watch list at 47.50, which I'm cool with. This doesn't mean I'm going to start buying at 47.50. What this means is I'm going to start selling puts for around this number or below. Now, guys, if you paid today's price of $55 and the low assumptions occur, you're going to make about a 4% return. If the middle assumptions occur, you'll make about 7.8. If the high assumptions occur, 11.8. So as this price goes lower, these returns will go higher. All right, let's check out 3M.
All right.
So 3M, guys, they reported $2.68 in profit versus an estimate, Mo, of $2.34.
Great.
Big time beat. They reported $8.02 billion in revenue versus $7.99. So not a huge beat there, but they beat on both, and they're up 5.5% or close to 5% now. And like I said, I currently own the stock, a little over 5% right now. I was buying it. I don't remember where I was buying it at. It was sub 100.
I thought it was like the 90s.
I meant in the 90s.
Yeah.
Like my basis is probably low 90s right now.
Nice.
Because I've been buying. Its low recently was $85, and that was just yesterday, actually. Oh. Okay. Its 52-week low is 85. Guys, look at this. All-time high. January 26th, 2018 of $210 a share. I can assure you that if we went back to this date and I said to you, I'm not willing to pay more than $80 for this company, I would have been butchered saying, that's not going to happen. You know what 3M does? They do everything. They do sticky notes. They do masks. They do this, blah, 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 blah. Guess what, guys? You've got to remember that things can get crazy. At 2.5 times higher price, the current PE, actually not showing a current PE because of the write-offs, but let's the average, the 5-year average, the 5-year price to free cash flow is 9. The 1 year is 11. You'd have been at almost 25 PE, which I could make the argument, I think, for 3M being very high teens on PE.
Sell everything.
They sell everything. But they've had some issues lately with their lawsuits, settling 2 major lawsuits, the earplugs and was it masks? What was it?
It was water or something. There was like a clean water thing, and then it was also the earplugs for the military.
Okay, now you might sit there and say, well, how do you own this stock and not know what these are? Guys, I like to stay very high level in these companies. So Mo, tell us some information on their report that they sat there and said, what were their earnings and revenue looking like?
So this is something I actually forgot about. Do you remember their healthcare spinoff that they were doing?
No, I don't remember that.
So I forgot that they were doing this healthcare spinoff, and that's expected to be complete in the first half of 2024. Maybe that opens up some value. You know, I haven't been considering that. I don't know what portion of their business of revenue
I don't know.
and profit, but
you were right. The Public Water Systems Agreement.
yeah, that's it. Public Water Systems Agreement addressing the legal matters here, and they actually have a blurb on it. Where was that? Here. So August 29th, they made a court appointment negotiating plaintiffs' counsel to resolve the Combat Arms earplug litigation, and that is going to be a total of $6 billion between 2023 and 2029.
So that's the recorded pre-tax charge of $4.2 billion.
Right here. Yep.
That, guys, is why they have a net income loss of $1.47 billion, but yet their free cash flow is still 4.4. They took that loss, that $4.2 billion day one, but the cash flow will come out over the next 4 years. So this will decrease over the next few years. That's what I want you guys to see. When you see these differences, there's usually some sort of write-off. When the net income is lower, significantly lower than the free cash flow. That's the big thing there. Go ahead, Mo.
So the GAAP loss per share of $3.74 and operating margins of minus 30, basically 32%, include the previously announced settlement for the Combat Arms, like we were just talking about. Yep. And sales of $8.3 billion, down 3.6% year on year. Organic sales decline of 3.7% year on year.
So even though they beat on their revenue, it's still a decline in revenue. Okay.
Cash flow of $1.9 billion, up 25% year on year.
Oh, wow.
Adjusted free cash flow 1.9, up 39% year on year. Returned $828 million to shareholders via dividends.
So look at this dividend yield, Mo. 6.8%.
Holy moly.
Pays $3.3 billion of their 5.4 in the last 5 years and of their 4.4 last year. It's a huge chunk of their money. And with these settlements coming up, the question we have to ask ourselves is, what's going to happen to that dividend?
I wonder if are they buying back shares? Do you know? Off the top of your head? I'll look it up. It's not in the press release, so you would think that they would tout that.
Yeah, why don't you look that up?
I'm going to look that up.
Because to me, I look at this going, hello.
Yeah. Exactly.
So guys, unpopular opinion, stop the dividend, buy back these shares, buy back these cheap shares. Give me more of the company. I'm sticking with you guys. I don't need that dividend. Buy more of the company back. If you can buy, let's say they took this $3 billion, guys, and every year they bought back $3 billion in shares. In 10 years, they bought back 30 billion of their 50 billion, assuming the price stays the same. That's the amazing part. It's a constant discussion I have with people. Everybody's obsessed with dividends. In a company like this, I look at it going, why? They got a lot of debt too. Mo, look at this, $50 billion market cap, $86 billion enterprise value. That's a $36 billion difference.
Yeah.
That difference is essentially their net debt.
Yeah.
I look at this going, pay down some debt, buy back shares, buy back these super cheap shares. What did they say? Anything?
So in 2016, yeah. So, but look, this is what I don't like.
The Cavs won the title in 2016. That's how old that is.
In the first 6 months of 2023, the company repurchased $29 million of its own stock.
$29 million?
Listen to this. Compared to $773 million in the first 6 months of 2022, they have $4.2 billion remaining. Now listen to this. This is what I don't like. In February 2023, 3M's board of directors declared a first quarter increase in dividend of 1%.
They are.
Like, what are you doing?
Well,
because they want to attract people because the stock is plummeting.
Yeah, the stock's plummeting. They want it to stay high.
Yeah.
Guys, this is one issue I have with 3M. This is probably like literally the biggest issue I have with them. Why are you doing this?
Yes.
But if anybody knows an executive at 3M, just give me a call. I'll explain to you proper capital allocation. This is not the right thing to do. Reward your investors by buying back shares.
This is totally backwards.
And guess what? You cancel that dividend, your stock's going to plummet. It's going to be even cheaper shares you buy back.
And you're going to cry for the first 6 months, but once you get over that, you're going to be very happy.
And 5 years from now, every investor like me who's sticking with you is going to be so appreciative, and long term, you guys are going to do better.
Yep.
All right, let's go look at the analyst estimates on 3M. Now, guys, you hear me talk a lot about our community, which is amazing with thousands of people in it in our software, and I want you to sign up. But here's the thing. I want you to make an informed decision. I'm not asking you to make a yes or no decision. I merely want it to be informed. And the only way to make that informed decision is get on the inside. Get in the community. Talk to these people. There are thousands and thousands of messages shared every single week, and it's absolutely incredible. We have a new ambassador program starting with more and more engagement from our most active users. Just like when you want to buy a car, you got to take it for a test drive, a 15-minute test drive around the block. This is a 7-day full access, free test drive. That's all I'm asking of you. It's so simple. Go to everythingmoney.com, sign up for the 7-day free trial, full access. Go in the general chat, tag me at Uncle Paul, and say hi and tell me where you're from. Love to hear from you. Everythingmoney.com. Go check it out. Now let's go see Stock Analyzer for Coke. Look at that. Okay. So mid to high single digit EPS growth. Revenue growth, low to middle of single digits. Not much. This is not an exciting company, Mo. Okay, let's go to Stock Analyzer tool. When was the last time I analyzed 3M?
Mine was 2 weeks ago.
Yep. All right, Mo. What were your numbers?
1%, 2%, and 3% revenue growth.
I did 1, 3, and 5.
Okay.
Because I thought to myself, inflation 3%. Okay, give it to them for 10 years. Fine.
All right.
Profit margin.
11, 13, and 15%.
So I actually went lower. I did 10, 12 and a half, and 15.
Okay.
And for free cash flow, look at this. I like about this. Their free cash flow tends to be higher than their net income.
Yep.
I like that.
I went higher for that.
So I did too, but I actually went lower on overall free cash flow because I had these settlements to make.
That's a very good point.
So I actually went 12, 14, and 16. What'd you do?
I did 13, 15, and 17.
I still think yours is fine, Mo.
Yeah, it's not crazy.
But I wanted to go a little bit more conservative than that because they have these settlements that are going to eat up cash for the next 10 years or so.
Yeah.
One is like 4 or 5 years. The other one's like 10 years. So it's something to consider. Now, PE.
I just moved mine up. I went 14, 16, and 18 because I was at 12, 14, and 16. That's too low for a company like 3M.
I agree. Mine's 15, 17, and 19.
Oh.
Because of the everything company.
They're the everything company, yeah.
And desired return, guys, again, I did 10, 12, and 14. These include dividends, by the way.
I did the same thing. And frankly, I am not worried about these lawsuits. They figured it out. Now it's just a matter of paying people.
Yep. So hit the analyze button. Look at this, guys. 75 to 88, 130 to 140, middle price of 100 to 112. It's on my watch list, only at 85 because as it goes down, I keep setting a trigger price so I get notified. But I look at this saying, if the business is able to do what I think above, I'm going to make a really good return in my opinion. But again, if it doesn't make sense to you, cannot buy it. There are issues with 3M. They have declining revenue year over year. They have these lawsuits they still need to pay out. And the dividends thing, I don't think they're good capital allocators.
No. Yeah, that's right.
Guys, thanks very much. I appreciate it. We have a lot of earnings results this week, so make sure you pay attention to our channel.